Given some of the volatility in the oil price at the moment, I thought it'd be interesting to do an update on Exxon, the second largest oil company by market cap. What's going to happen over the next few months? Are we going to see it recover after the weakness seen during the summer, or actually is the risk of a slide back towards the lows for the year so far? We've seen a lot of volatility in the oil price during the summer. The oil price bounced back since those April 2020 lows. So I thought let's take a look at one of the major players in the oil market, Exxon. It's like many stocks, of course, it's recovered since those lows set in March 2020 when we saw the coronavirus pandemic really start to grip the world. By June of this year, it had more than doubled off the March 2020 lows. But it's not exactly made a lot of progress over the last few months. At the time of recording, we're trading pretty much where we were, 7 months ago in February for Exxon. So I thought let's take a look at it in a bit more detail, look at some of the recent news, see why it might be attractive to investors, then come back onto the charts and take a look at the technicals in a bit more detail. Hello, I'm David Jones from Capital.com. I thought we'd do an update on Exxon, a bit of a longer term outlook towards the end of the year, given perhaps some of the volatility we've seen in the oil price over recent months. So let's take a look at the stock again in a bit more detail. So as usual in this video, I'll talk through some of the recent news, the earnings, why it might be attractive to investors, where it's currently trading. Then we'll jump back onto the charts and take a look at the technicals in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different content on the various markets that we look at throughout the week. Right, let's get into it and take a look at Exxon in a bit more detail. So the company was formed, as we know it today, back in 1999 by the merger of, not surprisingly, Exxon and Mobil. And this has created the second largest oil company in the world by market capitalization, so by how much the company's worth. We had second quarter earnings at the end of July. These came in at 110 cents per share. That was slightly ahead of market expectations, not drastically, and revenue as well was a bit better than expected. But we haven't seen, I don't think, much of a direction for the stock since. Clearly, the oil price has really helped the earnings of oil companies. We saw just in July the price of oil hit a 2.5-year high, and of course, higher oil prices should help the share prices of oil companies. But in recent months, we have seen the price of oil perhaps under some pressure. It's lost some of that momentum that it had since the April 2020 low. So, what sort of impact might this have on oil companies? At the moment, the dividend yield on Exxon might be attractive to investors. That's where investors get a payout either every quarter or every 6 months. At the moment, the dividend yield on ExxonMobil is around 6%. So that could make it attractive to longer term investors. It also has a relatively low price to earnings ratio compared to, for example, the broader market, but also compared to its own average price to earnings over the last 5 years. So theoretically, from that point of view, the stock is cheap, inverted commas, if we're looking at it from an average PE. But where might it go next? We have seen over the years a bit of a steadier downtrend for ExxonMobil. Perhaps it's turned the corner. Let's talk about the levels to watch. Then we'll jump onto the charts and take a look at things in a bit more detail. So for me, the most immediate hurdle, the highs hit pretty much after earnings, up around $59.50 for the stock. On the downside, we saw a low of 52 hit in August. I think $50 may be a psychological level where there's potential support. But as usual, to put some color on these numbers, let's take a look at the charts. If you look at the really big picture view for ExxonMobil, you could argue it's been in a downtrend since 2016, the summer of 2016, at least. So we're 5 years into this major downtrend. And you can see the price really fell away from 2019. So I think that is something to be aware of. But let's come back to the price action and the trends in a few minutes. Let's kick things off as usual with our moving average. So we've got a 50-day moving average here, slightly longer term one, as we're taking a bit of a longer term view for Exxon. And of course, just as a quick reminder, moving averages generate buy and sell signals. If the price moves above the moving average, like here in November of last year, which is when the oil price started surging again, of course, that's a buy signal. And when the price falls below, like if we pick up here in July of this year, as the price fell through, what was it, about $61 through the moving average, that was a sell signal. And it's stayed short effectively since then. We have seen just over the last couple of days or so, the price moved back towards the moving average and fall away again. So at the moment, as far as the moving average is concerned, things are bearish. We'd need to take out those old highs set around $56.50 for the moving average to generate a buy signal from here. So under a bit of pressure at the moment, according to the moving average. Taking a look at the RSI, and we've had a couple of buy signals over the last 2 months or so. This one in July, the market went, the RSI went oversold, and we did see a short-term base for ExxonMobil, and then again went oversold in August, middle of August, and again only a short-term bounce back. And here we are at $53.20 at the time of recording, threatening those old lows again, and the RSI perhaps will get pulled into oversold. So I think it's an interesting stock to look at, but let's take a look at this price action in a bit more detail. So if we looked at the big trend, as we did at the start, since 2016, it's down, and if we, so from a longer term point of view, for that trend to change, at the moment, if it's going to take out the trend line, the price needs to move through about $76, which is almost 50% higher than where it is today. So it's not been a stock that's been in favour over the longer term. We've seen it underperform the wider market. The stock has just been losing ground year on year for the last 5 years. So I think that's definitely something that needs to be borne in mind. Let's take a look at the shorter term. So if you look at the price, the trading since March 2020, the lows back then, clearly we did have a good trend up that started in October, November of last year when we came back and retested those old lows from March. But I think it's fair to say that stalled. We did see $54 or thereabouts providing support for the stock. It has slipped below it over the last month or so, briefly below it, and it's coming back down just today at the time of recording and slipping once again. I think the risk is, we are seeing weaker stock markets over recent days anyway. I think the risk is if we saw it break below $52, the risk is we see perhaps even more weakness again from here, targeting initially that $50 psychological level, but perhaps ultimately medium term, a sell-off back to the February lows. February lows came in around $44. So from a price action point of view and a trend point of view, it does look fairly weak at the moment. I mentioned we're talking about the lower PE than the average over the last 5 years, the decent dividend yield at the moment, but that doesn't mean a stock can't continue to fall. So I think under pressure for now. I think shorter term traders may want to see how it reacts in that sort of 50 to 52 zone to see if we do get a bit of support and perhaps a short term bounce from there. But I think in the short term, for me, from an investment point of view, I'd probably rather wait to see it move back above that moving average, back through that most recent high, if it can, at $56.50. So under some pressure, and perhaps the risk is for further weakness from here. It's an interesting one to watch, no doubt, because it's such a major stock. But for now, the price action suggesting that perhaps we could see it drift a bit lower from here. That's it for this update in ExxonMobil. We'll see how they trade over the next few months towards the end of the year. We'll see if that dividend yield and the low PE is enough to tempt in investors, or perhaps they get a bit spooked by what's going on in the oil market. We'll come back and do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.